We had a second straight week of very little movement for mortgage rates last week. That's a good thing as we continue to be under 7%. So what happened last week? Well, last week was chock full of what we call data-dependent news, numbers that we look at to see what's happening in the economy. Consumer confidence numbers have continued to drop. GDP numbers came out, they were down slightly. Hiring is down. Interestingly, consumer spending is up, but that's because consumers are trying to get ahead of the additional costs that they expect tariffs to cause. And the PCE and inflation report showed slowing inflation, but those numbers were generated prior to the real meat of the trade wars. So a lot of activity, not much movement. What about this week? Pretty quiet week this week. We'll get some trade deficit numbers on Tuesday, but Wednesday's the big day as the Fed meets, the Federal Open Market Committee meets, and the chairman, Powell, will have his press conference on Wednesday, and he will release the formal statement of the Fed and then answer some questions. Friday, every Fed speaker, it seems like, will be talking somewhere. So where are we at on current mortgage rates? Well, right now, according to Mortgage News Daily, the 30-year fixed is at 6.90%. Again, still fairly safely under that 7% number. The 15 years at 6.19%. The FHA 30-year is at 6.28%. So where does that leave us with mortgage rates? Well, we continue to be on this roller coaster. And if you've ever ridden a roller coaster, you understand you might come out of the starting spot on a flat track and then go up a steep incline and then a big drop, build up some speed, move around, twist, turn, all these kind of things where you're just bouncing around. And that's where we're at. We may have a quiet week followed by a massive week, followed by a quiet week, followed by a massive week. We just don't know. There's too much unpredictability on what's happening in the tariffs. I can tell you that the markets are starting to calm down. Chicken Little syndrome has passed. They no longer are saying the sky is falling due to these tariffs. There are still some outstanding concerns. For the most part, though, the markets realize our economy is not going to crash because of these tariffs. But interestingly enough, the American consumer does feel still like our economy is worsening. And I think that's kind of to be expected when you do something as drastic as these tariffs are concerned. So we'll see how this plays out. Very positive news could move rates. Very negative news could move rates. We'll just keep an eye on them for you. If you're not in our Rate Watch program, feel free to reach out to us. Give us a call and we will be happy to get you in that program for a refinance. But if you're thinking about buying, you're in the market for a house, we're seeing activity out there. People are moving forward. They're selling and buying houses. There's no reason to be on the sidelines, and I don't think a lot of people are now. I think more people have just realized this 6% rate range is the new norm. So if you've been waiting for rates to come down, a lot of people that shared that sentiment have now just determined we are where we are and it's time to move forward. If we can help you with a mortgage, we'd love to do that. Please give us a call at Weber Mortgage, where we are a family in the business of helping families.